On with the show. Terry, how are you doing?
I'm good, Chris. Thanks for having me again. Really enjoyed it last time I was on here, and welcome to everyone who's joined today as well. Thank you for freeing up your time of an evening. Yeah, no, really well. Doing well. We've had a few announcements with our numbers recently on the bank, and so we've been posting some good numbers as a bank. So it's yeah, so no, really good. Thank you.
Yeah, congratulations. Obviously, you were on just a couple of months ago, and we really sort of deep dived into your experience and interviewed you based on what Shawbrook was doing in the market at the moment. But what I thought would be really cool with this session is to sort of take it from acquisition to exit, really, and sort of explore it because I think I remember from the amount of questions that we had coming in the chat and the amount of engagement from our members after, we only really scratched the surface. So it's an honour to have you back on. And before we go any further, I wanted to raise something with you because the last time we did this webinar, I used a statistic about Shawbrook, which was that you guys had done £2 billion worth of funding. Now, you've been a very busy man, and the Shawbrook team have been very busy because in only a few short months since our last webinar, that's now up to 3 billion, which is mental. So, how do you find the time? What's been happening? Fill us in.
Yeah, no, I mean, it's it really comes down to the team have been fantastic. I mean, we've been growing as a team over the years. I mean, Shawbrook sees development finance as a really strong area of the market and really like the developer market, the developer type of clientele. And so we're in our 10th year of doing development finance, and Shawbrook has constantly been backing and pushing our growth in there. So we started off with 3 people. We've now a team of about 55. So it's a really sizable team, and they really work hard in finding clients, generating the business, supporting the clients through that. I mean, our repeat business has really shot up over the last couple of years. So it's really down to the team for how successful and how our growth has really ramped up. I mean, my area, sort of what I do running the team, is I kind of focus on looking at sort of products and appetite and where we should be. And really, that's probably quite the easy part of the business, is really say, oh, look, I think we should be lending a 65% loan to GDP. That's the easy bit. It's the people on the ground and the team that have to actually go out and and explain Shawbrook and get people to buy into Shawbrook and and offer the product and the service that we offer. And so they've done a fantastic job. So if I could take this as an opportunity just to really thank the team for all the hard work they've done. They've just been fantastic, and they've just got the constant drive to keep growing and keep supporting our clients.
I'm sure they'll love that. And I can tell you from personal experience, when I'm out networking, and I do a lot of networking, as you know, the moment someone mentions Shawbrook, my ears prick up, and I literally have to feel like I'm eavesdropping on the conversation to let them know. Did you know that UK Homes Network is a partner of Shawbrook? And it's always good to see because I do find more and more that I'm hearing Shawbrook's name crop up in conversations, and you guys are so active in the market now. It's fantastic to see and great to be a part of.
Yeah, no, I like where the whole of UK. So it was not too long ago, so probably just over a year now, that we recruited up in Scotland, because we have an office up in Scotland, and we recruited a relationship director up there, and then a few months ago now we've recruited another one because that area has really grown for us. We've got people over in Wales, and then obviously across the whole country. So we've really been growing in all the kind of key sort of towns and cities, and we just see it as a great market and a great product. I'm sure we'll talk about this as we go on. I mean, it's been a difficult market for developers. I'm sure we'll probably touch on that, but it's just I love development finance. My team love development finance. It's so great to provide funding and then watch something being built. It's my preferred type of lending. I just really enjoy it, and my team do as well. And I think that makes it all the more easier to do it when you actually do enjoy what it is you do for your day job.
Yeah, and before I touch on that, Terry, you literally oversaw this from the start with Shawbrook in terms of developing the development finance team and taking it to the position that you're in. So, would you mind just for those guys that hadn't been on the previous webinar, just giving a bit of background to yourself and your experience?
Yeah, so I'm the MD of Development Finance. Like I say, we're in our 10th year of doing development finance. I joined Shawbrook when they were a couple of months up and running. So Shawbrook have been going for about 15 years. I actually started in credit with Shawbrook on their property side, and then head of risk. And my previous background at Clydesdale Bank was doing development finance as a relationship director. So I pitched the idea to them because we were growing at the time in Shawbrook. We were growing our bridging side and our heavy refurb and products. And I kind of felt, well, actually going into pure development feels like that's the next step for us. So I pitched it to the bank, and they liked the idea, and they kindly very much trusted me to build it. And like I say, over the last 10 years, they've been really supportive in building it. Like I say, my background prior to that was it's always really pretty much been in property at Clydesdale, and before that was I started my career at NatWest, but always really in the sort of property sector, whether it be sort of investment or refurbishment or development.
Great. And you quite rightly said that there is a lot of doom and gloom out there, and we've covered it in previous webinars. I know that there's a lot of content out there on socials if people want to sort of go into that doom spiral. That's not what today's webinar is about. I think the most value that we can provide to developers that are listening to this is actually sharing some of the real life experiences that you guys are having, and the relationship is so important in terms of the way Shawbrook interacts with developers. So I really wanted to focus on that in today's session. So would you mind just giving a bit of an insight into sort of maybe what sort of experiences your developers are seeing at the moment, what they're feeling, what it's like having boots on the ground? And I appreciate there may be some negativity, but also you guys have witnessed a lot of positivity coming through as well.
Yeah, I mean, yeah. Look, it's like I say, it has been a difficult year for developers, and there's been a lot. There's been regulation changes. There's obviously been a change of leadership now, and that all kind of you're always sort of kind of wondering about what does that mean, how's that going to impact us, but is what this year probably has been is what our developers, what we've seen with our developers is that there are still opportunities, and there's great opportunities. And that's what people are probably focusing on more. When you've got a very buoyant sales market, um, a development will probably take maybe sort of 12 to 18 months to build. And over that period of time, if you've got a buoyant sales market, your value, your end value is probably going up. So when you've got like a little issue where it might be taking a little bit longer to do the build, so maybe you're kind of racking up a little bit more interest, or maybe some materials are a little bit more costly, that actually when you finished it and you're going to get it to market, it's probably gone up in value anyway, and that can absorb sort of the problems that might have caused, the little extra cost there. Obviously, over the last couple of years, that's not been the case. It's been a more difficult sales market, and we obviously have seen rates rise and cost of materials go up. So developers now I think are looking more at the exit, and also looking at more at not just kind of one exit opportunity being a sales exit. They're looking at, is there a couple of other viable different exits I could consider? And so we're definitely seeing a lot more thought go in on day one as to what's the exit, how are we, and if something isn't how we expected, if the market hasn't done what we expect to do, how do we think we can pivot and what we can do? And where there's been really good opportunities that I've seen with our developers is where they feel they can add value. So, you might have a site that already has planning for, let's say, 14 apartments, and you think, actually, I might be able to get another floor on there, or there might be a bit of a car park land. Actually, maybe I can build some more there. So they're really kind of sweating the asset to get the most out of it and adding value that way. So that's where we've seen a lot of the clients sort of look at the schemes now as to not just, oh, look, I can just do 10 houses, whatever it might be. Actually, how can I really get the most out of this that actually, then makes for a really good exit option at the end of the day? So there definitely is some really good options, but people are just being a lot more. It's a year of just being more selective for developers rather than just sort of going, I'm just going to ramp up business. They're being more selective and being, sensible in kind of what they're choosing. But there's definitely opportunities out there.
Yeah, absolutely. I always find that there's more innovation when there's
Yeah.
economic downturn, and that's when the strategies get even more creative and the projects become even more exciting. But I wanted to sort of um, bring it back to that exit question, which is that what you're looking for as a lender? Is that what is going to tell you whether a project's going to work or not when that developer's got a clear exit strategy and multiple exit strategies, or is there something a little bit earlier that you're looking for that will give you a key indicator whether you think that that project's going to work?
Yeah, I think it is the exit now that probably has become the most important question when sitting down and talking to a developer about an opportunity they're looking at. And it's really coming down to have you stressed certain scenarios? Because, like I say, because it can take sort of maybe 12 to 18 months to for the your build phase. And as we've seen, obviously, over recent years, certain things can happen quite quickly in the market that can adversely impact, developers. And it's kind of just having that really open chat to sort of say, what worst case scenarios have you considered over this sort of 12 to 18-month period, and or what would you kind of consider pivoting? Like we have quite a few of our clients would build to sell, but halfway through schemes, they picked the phone up to us and said, "Look, we're well aware that our scheme is about to come to PC sort of 6 months down the line, but we're noticing the market just isn't stable for sales. So we're going to pivot and we're going to hold as an investment and we're going to rent." And so you see a lot of sort of pivoting happening, but it definitely is on day one just understanding what is the exit and how do we think we'd weather any storms that might kind of happen. What are your other viable? It's not about just maybe having one viable exit. It's probably developers now saying, look, I've got a couple of viable exits here that I feel I can do. Whether I could sell some, hold all as a rental, sell as a block. They're coming to us with more different exit options that they will then realize coming closer to reaching PC, because they'll then see where the market, what the best play in the market is for the option.
Yeah, I really took away from our first webinar that working with Shawbrook or working with a lender specifically is a lot like a business relationship in terms of it's not just lending money. There is actually like both a drive there to make it work and make things happen and get results. And I think there needs to be a level of self-awareness from the developer there that things could go wrong or there is uncertainty in the market. So if you have that self-awareness to understand that and have the possible outcomes lined up ready, gives you way more confidence to be able to lend that money and actually pursue forward with the project. Would you say that's a fair assessment?
Yeah, definitely. I mean, we've always seen development finance as being a partnership because, like I say, we're all businesses, but we're not successful if our clients aren't successful. So we're always looking to support them and support them through their journey, and that's kind of why over the sort of last couple of years we launched our planning assistance loan, and we also more recently launched our dev exit loan, because we've kind of looked at the whole journey for a developer and we've tried to find ways we can support them across a wider journey of their project, because it isn't just about sort of lend and forget and then just wait to the end and expect to get the money in and that sort of thing. It really is a partnership because we want to keep working with those clients on their second, third, fourth projects with us and keep growing, because as they grow and do business with us, we grow and we can both be successful together. So it's always a partnership is how we look at it, and it is always about looking to support and, like I say, understanding what the hurdles might be together as a lender and a developer. Let's talk about where we might feel the hurdles might be. We're always happy to share with our developers as well about kind of what we've seen. If we've got a developer that comes to us and said, oh look, I'm going to do a scheme in a certain town, we can say, oh actually, we've done a few here, just to let you know this is where a few little hurdles popped up, just to put it on your radar. So because we just want that two-way dialogue of just talking as if you're kind of partners in a business, really.
Terry, I promised the audience we've not pre-recorded this. This is not pre-planned because that segue was unbelievable. My next question was actually about specific areas and regions that you're seeing do particularly well at the moment. You mentioned Scotland there as a big market for you guys, and you've expanded up there. Scotland, obviously, with me and David, we're both half Scottish, and it's somewhere that we're really keen to take UK Homes Network. Are you seeing a lot of activity there that's sort of bucking the trend of maybe the rest of the UK? And specific areas, what do you think sits behind that level of growth?
Yeah, well, like I say, I mean, Scotland's been a really good growth area for us, but we've always kind of we've always kind of looked at doing opportunities in Scotland, but we've never had the previously sort of had the office and had the team there. And we have that now. We have an office there, and we have a team there. We've had it for, like I say, the sort of the over the last year or so, a couple of years, and and again, it does come down to the team. The team that I have up there are fantastic at promoting us and working with clients, that kind of stuff. So again, it's like I say, it's one of the things. It's easy for me to say, oh, let's start doing lending in Scotland. I can say that, and that's great, but it's the team that actually really make it happen, and is why we've seen such growth there. So it's always down to the team, and thanks to them for that. So Scotland, like I say, you'll always find these sort of areas where, and like I say, there is always deals to be done and opportunities, and it's always, you just got to kind of find the right locations. That's what developers are really good at. They're really good at kind of sort of pivoting, and they're really good at sort of going, actually, instead of doing 20 houses here, actually a 6 housing scheme would work really well here, and just kind of pivoting sort of what they might look to do. They don't just go, well, I've always used to sort of developing 20 houses or 20 plants, so I'm just going to keep doing that. They'll go, no, this isn't right for this kind of area or this town or that city. And so it's probably less about there being really buoyant areas as such. It's probably more down to the developers just being, very smart and understanding what a town or a city needs, what it's missing, where it's, in a city, there'll be some parts of the city that's probably got a bit of an oversupply, maybe, that don't need it, but there'll be some other parts that actually could do with having some more housing. And just developers are really good at looking at it and seeing and going, this is where there's the opportunity, and this is what scheme would fit right. So, like I say, London Southeast has always been, always keeps kind of being buoyant, because anywhere around a major city, like Manchester, Liverpool, Birmingham, all those are kind of, and they're sort of the outer areas of are always kind of popular areas. But we've definitely seen ourselves over the last couple of years more sort of rural locations where, you don't have it's not where the people go for the jobs, but people are going, actually, do you know what? 4 houses just here actually make real good sense. And we've had some really successful developers doing some smart little sort of schemes in some smaller areas, and they've just sold off off plan. They've worked really well. So it's just more about developers are just, very, very good at finding what fits right in a certain town or city.
Would you say it's having that local knowledge, specifically about the market, about sort of what amenities are close by, what planning looks like in that situation, and most importantly, how the site stacks as viable? Is that what's going to make it run smoothly through lending stage? Is having that all mapped out and being very aware of what's going on around you?
Yeah, I think both for the developer and for a lender is having that local knowledge. Like and well, again, just we'll touch on Scotland because we mentioned it. One of the reasons we're doing so well in Scotland there is because the team are from Scotland and they know that market really well, and so they can talk very openly with the developers in that area, and the developers know, well, you understand my market, So I mean, it would be, a bit pointless for me to sort of go up to Scotland and try and tell a Scottish developer like what's their market and what I think works there. That would be crazy. But we have the right people. So, and the same for the developers. Local developers really know their market, really know what's selling, really know what the demand is, and they can produce a really lovely scheme that they know will work well in that area. So you definitely see really good success with the developers. Well, I think when you've got a developer and you've got a lender that are both sort of local and they can both talk and know exactly what each other are talking about and know the areas, and I think that synergy works really well.
I think one of the biggest problems that I'm seeing with the developers that I speak to is the ability to stay busy between sites and keeping the pipeline moving. And obviously, if a site's taking ages to go through planning, it's like, you've got to keep your trades occupied and keep them going. What are the more experienced developers in your sort of experience? What are they doing differently to stay busy at the moment?
Yeah, I mean, that's a really good question. What we saw, especially a couple of years ago, we certainly saw most developers, like if you're buying a site that's already got planning, you're probably as a developer looking at maybe sort of a 20% profit. And is what we, if you're buying it without planning, then you're definitely looking at a bigger profit, 30% and above. Is what we definitely saw was developers happily not looking for such a high profit, and instead looking more sort of, we saw some schemes where developers were sort of happy maybe with a 5% profit on there, because they want to keep their team busy. They sort of want to keep the lights on. So they were doing sort of smaller schemes, because again, the build time is shorter there and you can kind of manage your costs a bit better there, but with a smaller profit return, but just because they can keep everyone busy and keep it going. So we definitely saw that sort of mindset happening with some of our developers. But what we also did see is some developers who were always the type of developer that would sell, that would never hold, actually sort of thinking, do you know what, when you've got a dip in the market, and maybe that's over a longer period of time, actually having a portfolio of investment assets on your book generating income for you actually is a nice way to know that you've always got some income coming in. So we've seen over the last couple of years some of our developers sort of now going, do you know what, I'm going to sell 60% of the units we've got, but we're going to keep 40 ourselves. We're going to add it to our own investment portfolio so that we've got some income churning in the background at all times. So we've definitely seen some changes in strategy there.
It's quite funny. It comes back round, doesn't it? Because what you were saying about the developers that are pivoting, actually, it's creating, although it might be second choice, it's actually creating healthier businesses for them in
Yeah,
the long run.
exactly.
If they're
Yeah.
keeping that cash flow come in. So that's really, really interesting. Yeah. So in terms of the sort of schemes that you're seeing at the moment, we always love a good case study. Is there any sort of schemes that really stood out to you in the last sort of 6 months that you found quite creative or quite interesting that would really resonate with our audience?
Well, I would say the ones that we've been seeing that, like I say, that have been really interesting. I won't say actual names, just to kind of protect them. But we've seen a number of cases where the developer is being sort of, again, very smart. We had one developer where they bought a derelict pub, and it had planning just for a couple of houses on there, and they were able to sort of relook at it, go back in, and get an extra couple of houses on the scheme. Now, and the scheme is absolutely beautiful, and I went to see it not too long ago, and they all sort of sold, and it's really, really well done, really sympathetic to the town. It was absolutely lovely scheme. But it is what developers, and this developer is really good at doing that, is what you've got to think about is, because you're then going back in with planning, you're obviously going to be taking up a little bit longer than what you would have done normally if you just got straight in and started doing the build. So obviously you're sort of having a bit more of an interest cost rack up there, because while you're trying to get the change in planning and enhanced planning. So, but he was very, very sort of smart at understanding the finance structure that you need for end to end on a development scheme. So he was very well prepared in understanding how each stage of the development works and how that sort of funding is needed. So he had that all sort of mapped out. So, and it just worked really well and really nicely. And unfortunately for him, halfway through the build, he had a contractor fail on him, which has happened to quite a lot of developers. But again, he was really good at getting someone new on board and working with them. And while it always does increase your costs a little bit, because of how he'd restructured the planning and got some more units on there, he was able to kind of absorb that extra cost and still come out with a really nice return on a really lovely sort of asset he's done. So again, those are the ones that I think are really interesting to see, because you see someone really looking at a scheme, thinking about it differently than what someone originally got planning for, actually looking, I can do something different here. And then also, dealing with the in-life problems that you have. Like I say, one of the biggest issues you can have is a contractor going under on you, because trying to get someone new to come in halfway through is a nightmare, and they're probably going to increase the costs. But being able to work through those problems, and they rang us up straight away and told us there was a problem, which is great. And again, it comes back to that partnership, having us brought in as soon as they know, so we can kind of work with them. It's really good. So it's seeing those kind of schemes, seeing someone look at something and be able to do something different than you think is what it's going to be, and make it very successful. So we've seen a lot of those over the last couple of years, a lot of sort of schemes like that, and they've been really interesting to sort of see and work with the clients going through those.
Yeah, so far this webinar has just been a breath of fresh air with loads of positivity. I think it's been really really nice listening to some of the examples that you've given, Terry. And on that note, to sort of drive home the innovation and the developers that are really finding unique opportunities in what is quite a testing market at the moment. One of the biggest complaints is probably build costs and also getting trades on site. With contractors potentially going bust. But what I've seen, and I'm sure you've seen this as well, is that some of the methods of construction and some of the materials that are being used, that's where the real innovation is being driven, because they're able to sort of find new ways to develop that weren't previously available. Is that something that you're seeing more of come through Shawbrook? And is that sometimes a bit difficult in terms of lending or sort of analysing what they're planning to do with all these unique and new building materials that are coming to the market?
Yeah, well, you're right. I mean, like I said, there's lots of innovation, and I've always think developers are entrepreneurial by nature. That's kind of what they are, and that's great. And like I say, it's always interesting. You go from scheme to scheme, and there's always something new you kind of learn, or something that someone's doing. And there's always the sort of the world of modular construction that's kind of always sort of in the background, talked a little bit. Modular hasn't really taken off to the level it maybe could do, but you get the pods and that kind of stuff that your bathroom
Yeah.
pods that people use and all that kind of stuff. So it is just for us, like I say, it's always really interesting to hear about new ways that people are looking to construct sites and what they're going to do. For us, it's where it comes down to kind of a lending issue for us. It's more just about making sure that whatever is being used is mortgageable at the end of the day. It's not on a list where people would not provide a mortgage because it's X sort of type of material or X sort of construction. And luckily in this day and age, we don't really, you don't really see that anymore, that there's any kind of, no one's using asbestos anymore, right? So you don't sort of see any of that stuff. But sometimes you do get a curveball where I've not heard of that type of concrete construction, and we have to do a bit of research in the background to sort of go, yeah, what does that actually mean? What is that made of? But we've never had anything to date where we've sort of gone, yeah, that's just, we just couldn't work to that because it's not been mortgageable. But you just see, is what I see more of is like say just smart ways of using space in a site. We've seen a lot of that. Just you go into a property, because I live in a property that was built in '95, so it's a very basic box type. And I look at it and think, actually, do you know what? There's so much better way you could have used the space there. And you just see so many fantastic ideas on space that I kind of sit there and go, oh my god, that's such a good idea. Like, why wouldn't I ever think about that? And so that it's a really, while there is the bigger innovation we see over sort of maybe different types of how you build and materials, is just the clever way to use space to really get the most out of a site and a scheme. And I think, again, for a buyer, no one really wants the sort of cookie cutter box type stuff. Going into a place that you can see has been well thought through by a developer that has kind of probably gone there and gone, what would I like to live in? How would I like the property to be? And what do I think, would make people's lives easier who are going to live there? There's just been so many great things that developers have come up with that you go in. Most of the time you go into these sites and you're just jealous. You go, oh God, I wish I had that in my place. That's amazing. And it's lovely. It's just lovely to see.
Well, Darren's mentioned about sort of steel frame buildings, but I'd say even, as an ex-estate agent going back sort of 10, 15 years ago, the landscape in terms of what was mortgageable and what's not mortgageable anymore is completely night and day in terms of
Yes.
how open-minded mortgage lenders are to certain properties. But I always found it quite frustrating because my area was North Coventry, North Warwickshire, and heavily mined, huge mining
Yes.
area. So a lot of non-standard construction post-war. And one of the particular types of property that used to always throw mortgage lenders was Cornish Type 1 construction, which
Yes.
if you've never seen it, they're basically mushroom houses. They're weird, they're ugly, but they're good houses. They've got good space in them. And I always used to get quite frustrated when they would come to the market and they would be rejected by a surveyor or by the lender. And actually, now I'm older and I wouldn't say wiser, but actually, when I look back on it, the reason that they were rejecting them was because during the 70s, they ripped out all the concrete and just erected timber frames, and there was no sign off, no building regulations, no certificate. It was actually, sorry, I'm showing being a bit of a geek here, but it was a PRC certificate that had to be issued during the 1970s to ensure that it was actually done to a proper standard. And that was the only reason why those properties were rejected. But actually now, when you see sort of the houses that are going up for sale in Coventry and sort of on the outskirts, most of those are being bought with mortgages now. So it's surprising how attitudes have changed and how much things are moving in that space.
Yeah, I remember years ago, even in London, you used to have these block of flats where it sort of had a shared walkway at the front to get in, and you couldn't get mortgages on those back in the day. There were ex-local authorities buildings, and then when people were trying to sell them off, they were like, "Well, no, we don't like it because there's a shared kind of walkway around the front." But now they're sold, and you can get mortgages and all that sort of stuff. Yeah, there's been that the whole market of what is acceptable and mortgageable. And I think it probably comes down to, can you get some insurance on your property, if it's going to fall down, that sort of stuff, has opened up a lot more, and there is a lot more acceptability. But like I say, luckily in this day and age, no one's really using material that's, that gives to NHBC or any of the build warranties companies a sort of concern.
Yeah, definitely. Right, Terry, I've only got you for 20 more minutes, so I'm going to take you to the premise of the webinar and try and convey as much value to our audience as possible, because me and you ended up having a really good conversation on the last one, and we didn't get too much into specifics of the process of lending. So I really want to share that with people, because I think certainly with some of the developers that we deal with, they might not be that experienced. They might, it might be their first time approaching a lender, and might be a little bit scared about how the process all works. So I'm going to take it right back to the start. What should a developer have in place before they even offer on a site?
So I think, and again, I think it's changed over more recent years. I think developers, whenever they're looking at an opportunity, they need to, because a development site probably has, maybe sort of 4 different funding requirements. So you'll look at it at the acquisition site, and the funding requirements require different needs. So at acquisition, for example, what you need is a lender that's got speed and certainty, so you've got the money to get the acquisition. The acquisition side, it sort of also depends then whether you're buying a site that already has planning, or whether it's it doesn't have planning, and you're going to be taking maybe a planning risk, because there's fewer lenders in the market that would do a planning risk, whereas there's obviously quite a lot. If you've got planning, they'll do it. But you need someone to be quick and make sure and that's what a developer needs to know. So they need to know they're working with a lender that can be quick and confident that they're going to provide the money for the acquisition. You then look at the sort of build phase, and again, you need to, as a developer, you need to look that the risk of the build is obviously making sure you can kind of do it on time and on budget, and obviously working with a lender that, because how the development work is, a lender will provide you with, depending on how the numbers, 100% of your build costs. So the lender will provide you that money. You want to make sure the lender is stable, that they're going to be there throughout the build for you. And then you kind of look at the sales phase. And again, there's a different risk associated with that. You're going to go, well, what's the market? Will it sell within the 6-month period that I've had allocated within my facility? Will it get the values? So the first thing that I think a developer needs to look at, they need to look at the whole finance journey required for a scheme, and they need to sort of understand what they need and what support they need from a lender, and look at sort of where the risks are and how they're stressing. So like say, if it's in the build phase and you think it might take an extra 3 months, what does that mean for extra interest? What does that look like? How am I kind of allowing for that? If the sales are going to take longer than, let's say, 6 months, again, what does that mean for interest? How does that look? So first thing I think a developer needs to do is just really look at each stage of the development, what it needs from a finance perspective, and what if you stress out each of those little phases, how does that look? What does that look like? Does it still look like it's a viable deal and an opportunity for you? So that's what I would say is the first thing a developer needs to do is just look at the whole life journey of the asset that you're looking to build.
And would you get a lender involved like right before all that, or would you sort of as you're starting to go out there and identify what it is that you're looking for? How early would you get your lender involved?
I would get them, and so is what we normally see is we'll normally see a developer will give us a call and they'll say, "Oh look, I've seen a site that I really like, and I feel like I can." They might say, "Look, it's got planning for, or it's got a house already on there." Let's say, for example, but where I feel like we could knock that down and we can get planning for 4 houses. And this is kind of, this is what we feel the build costs will be, and they come very before they've even put an offer in. They'll come and talk to us very early on, and that is what I would really recommend. Like for myself and my guys, the team, we have no problem with anyone picking up the phone to us and saying, "Look, can I just bounce something off you for 20 minutes?" And sometimes the deal doesn't happen, so we might not get a deal from that. We don't mind that. We don't charge a sort of commitment fee for our time to talk to us. Where just pick up the phone to. If you go onto our intranet, you can see all our contact numbers. Phone me. I love talking about developments. So we're more than happy to have a little 20-minute chat with you, and they'll say, "Look, we've got that." And again, this is where we'll sort of say, "Oh, do you know what? We did a scheme just down the road, just to let you know. I know you're thinking it's going to sell in 3 months. Actually, the one we had sounds quite similar. It took us 5 months to sell, so you may want to just budget that in when you're looking at." And we're happy to have those sort of just open chats, and no one has to guarantee to give us the deal. We don't hold anyone to that. We just we wish everyone the best, and if they do get the opportunity and they want to come back and talk to us and see what we can offer on a funding, we're more than happy to do that. So I would definitely recommend just give a lender a call. They'll be more than happy to talk through and share their thoughts with you, and do it early on, because then it helps. I really think that helps.
Well done, Darren. You've got your first volunteer in the chat there. Darren would like to have a conversation about a site he's working on. So
Lovely, great.
fantastic. Um, we talked about pivoting. How does the sort of funding requirements change from ground level to topping out? How can the funding change during that period?
I think that where someone's pivoting, and also it depends on kind of what the pivoting is. Whether you're pivoting, you're sort of thinking, "Oh, actually, we were building 10 flats and 4 of them were going to be 3 bedroom." We're thinking, actually, we're going to try and change planning there and change
Yeah.
that to a couple of ones or a couple of twos. And we see that a lot. That is one thing we definitely see. And like I say, as a development lender, we like that, because we know that the developers are, as they're going through the build and the life cycle of the scheme, they're thinking about, actually, the market's changed. Let me change with the market. And it's what you'll see is, so it depends. So if it's in that stage, just pick up the phone to us, tell us what you're thinking about doing. You'll obviously be going in for a change in planning. We'll look at whether that means we need to extend the facility for you for a little bit to allow you a little bit more. So sometimes that's what it sort of means. It means you might need a bit of a longer period, which will obviously mean a little bit more interest. But depending on what you're pivoting on the change of planning, you might be actually squeezing more value out of the asset and making a better return for you. Especially if you're looking to hold it as a rental, you might be getting more units and more rental. So you have that kind of the pivot there, and that is perfectly great, and we see it happen a lot. And then you've got, maybe you're going to pivot on your exit, and again, that's not, we don't mind if you say to us on day one, "Look, we're building these to sell," but then come up leading up to PC, go, "Actually, guys, we don't think it's gonna, now's not the right time in the market to sell, and actually we think we want to hold all of it, or we want to hold 20% of them, or whatever." Again, we love that constant, when developers constantly sort of ring up and say, "Look, actually, we're thinking of pivoting, we're thinking of changing strategy because of this is what's happening in the market," and that's great. We love that. So, it all really depends on what the pivot changing is. But there's, like I say, developers are entrepreneurial, and I've never seen a developer yet pivot to a way that has been more negative for them, and it's always been sort of positive, and always is either going to realize better profit at the end of sale, or more rental income. And that's great to see, and we'll work with them with that, and look to adjust the product and what we've got to kind of fit the new pivot that they're looking to do.
Well, it's interesting because there are so many variables, and one of the other variables is that the build can overrun on time. So you're really forthcoming about the fact that you know Shawbrook are there to help. It is a partnership, and that your contact numbers are open. But what I want to know is if I'm a developer and my project's sort of overrunning in terms of time, what does a good conversation sound like from a developer to you guys? What sort of how should that lead that conversation?
Yeah, I would say there's probably sometimes there maybe is a bit of a myth where people maybe think, actually, I'm not going to let the lender know. I feel like I can kind of catch up the time, or I can kind of fix it and I don't need to let the lender know because I'm worried about how the lender might react. And again, I can't speak for all lenders. So but Shawbrook is, the sooner, we love it when someone picks up the phone to us straight away and go, look, just to let you know, we're having a bit of a problem here. We think it's going to cause us a bit of a delay. Because I mean, I've been doing development for a lot of years, and it's very rare that I've seen a build on time anyway. You know, if it's too cold, you can't lay bricks, right? There's loads of things that impact it. Unforeseen issues, not caused by, you know, a developer not, you know, really focusing on a scheme. It's usually unforeseen, outside of their control. And we're, as a bank, we're in the development sector, and we understand the development sector. So we understand that there will be delays, there will be some problems happening. And we love it when a developer just calls us and says, look, just to let you know, this is kind of, we feel we're going to be a bit pushed on here, but we just want to let you know, this is kind of how we feel we're going to handle that, you know, because, and it may be a case of, you know, look, we allowed for an extra long period in sales that we don't think we're going to need. So although the build phase is overrunning, we think, you know, we'll sell quicker than we thought. So there's that kind of, you know, there's a bit of give and take there. But it's, I would always urge just to phone up the lender, because it's better, because the lender will have a monitoring surveyor that will go out usually sort of every month to do the drawdowns, and a monitoring surveyor will tell us when they go, actually, do you know what, we've looked like they are a bit behind there. And that's fine, the monitoring surveyor will tell us. But it's always good if the developer rings us up and gives us a heads up and say, look, just to let you know, we're noticing this, because like I say, it's a partnership, and we want to help support to get that scheme built and finished and ready for the market for whatever the option is that the developer wants to do with that asset. It doesn't really benefit anyone to be saying, right, we're not going to finish and build this asset. And I think there's a fear, maybe some people think that that's what a lender will automatically do. And it's, like I say, it's not the automatic response that lenders do. It's about just kind of understanding and then just talking through, right, what's the solution? How can we help here? How will we kind of make it work? So I would always recommend just picking the phone up. We really like it when that happens, because we know there will be problems, and it's great when the developers ring us up and sort of say, hey, just give you a heads up, we've got this kind of sort of issue sort of happening, but we're dealing with it. Great.
Yeah, so property developers are entrepreneurial by nature. Entrepreneurial equals problem solving.
Yeah,
So is that's the key denominator there, that problems become crisis if there's no communication, and as long
exactly.
as the communication, it stays a problem and not a crisis.
Yeah, and we had, I mean, I'll give you an example. We had one of our developers over when sort of the COVID and the Ukraine war, one of our clients was having a problem getting concrete. Their supplier had dried up for concrete, and they picked up the phone to us and said, look, guys, we've got a problem here. We've got no concrete. And the relationship director that they spoke to said, sort of, not a problem, leave it with me. Phoned up one of our other clients and said, oh, look, do you have any sort of extra concrete, and or a supplier that can supply some concrete? And they did. And so they got them introduced to each other, and they were able to source the concrete and get their scheme finished. So that's the other kind of, again, that's why I say it's a sort of partnership. We may be able to help you with a solution. We may know someone that can get what you need, what you might be having a problem getting, because obviously, you know, currently at the moment, we've got just shy of about 300 schemes on the go at the moment. You know, we might have someone we can kind of introduce to that can kind of help you. So it's always good to ring us up and have a chat with us.
Great. Darren's got to shoot off for badminton, so if it's all right with Terry, I'll give
Please do.
Darren your contact details, and you
Yes.
guys can connect afterwards. And Darren, good luck with the badminton. I hope you win, mate.
Thanks, Darren.
If anyone else has got any questions and they would like to put them to Terry, please do put them in the chat, and we will do those before we wrap up this evening. It would be great to have your questions in there. Terry, I'm going to ask you a bit of a quick curveball question. I hope you don't mind. In terms of your sort of journey through Shawbrook and your career, I guess there's a lot of things that people can learn about, sort of leaders in business with their own property businesses. What would you say is the best advice that you've ever been given through your career?
Do you know what? That's a really good question, and obviously you have thrown me a bit of a curveball there. But do you know the one thing I've always fallen back on was an old boss of mine who actually was my first boss at Shawbrook. Um, I remember in a meeting with him, and I'm not sort of probably saying it in the exact words he said it. So, but he said to me that it's not his job to know every aspect of all the parts of the business. Is his job is to make sure he surrounds himself or brings on board the right people who do know those parts of the business that are needed. And that's kind of always sort of stood me. And I think that's very true, because I think if you put as a leader, if you put the pressure on that you're expected to know everything, and like everything about development finance, everything that can go wrong, every type of material that's used, that kind of stuff, it's just you sort of become a jack of all trades, master of none, and that's not what you kind of need. Like my role is to really support the team, and the people I surround myself with within the team are the ones that really know what they're talking about, and like I say, having the right people from the right, in Scotland or in the right locations, whether it might be Birmingham or Manchester. So that's why I would say the best thing is, don't think that you have to know everything. Just make sure you partner yourself up with some really good people. So for example, if you're new into the development side and maybe you don't know, you don't have much experience of the sales side, go speak to some local sales agents and do some research on that, and then partner up with a really good sales agent that when your scheme's ready, you'll use them. So it's just surround yourself with the right people for the various areas that you kind of need that support on. Don't put all the weight on your own shoulders that you think you need to know absolutely everything. That's probably my biggest sort of takeaway I've had, and that has helped me build what we've got here today at Shawbrook for the Development Finance Division.
Yeah, I love that. I've worked with so many bosses that are the kings of micromanagement and
Yeah.
that want to know every little detail that's going on, and eventually it makes them ill or takes their foot off the gas in terms of the wider vision of where you should be going collectively.
Well, yeah, and you can create a funnel issue where, like, if everything had to go through me, like it would be a nightmare for the team, and it would be a nightmare for our clients, because everything would just slow down. Like my team have my full trust to go ahead and provide the product that we do and service the customers that they do. They don't need to check in with me and run everything past me. And that's the point. You surround yourself with good people.
Absolutely. And one of those good people is going to join us in about 2 weeks' time. So we've got your colleague Keir coming
Yes.
on the webinar. So if you've enjoyed tonight's session, make sure you book in on our next one with Shawbrook in 2 weeks' time, where we'll be getting into development finance and lending again. So more questions and more stuff to cover off with that one, which is really, really exciting. Terry, where can people find you if they want to reach out to you? How can they get involved with Shawbrook?
So yeah, so we've got our page on the Shawbrook website. So you can just go onto the Shawbrook website, put in for development finance, it will come up a page. You'll see my contact details and various members of the team. And so reach out to any of us there. There's LinkedIn, of course, and my email address is terry.woodley@shawbrook.co.uk. Happy for anyone to reach me just via email. But there's sort of three ways you can get in touch with myself, or like I say, the wider team if you want to go via the internet. If you think there's someone that's better placed there than me.
No, that's perfect. Thank you, Terry. I really appreciate it. And we'll end on this question. What is the biggest misconception that developers have about lenders that they really shouldn't have?
Do you know what? I think it's the thing we were just talking about before, that there's a sort of fear that if you tell a lender there's a problem, everything shuts down and panic happens and you get pulled into the office and have to sit in front of the board or something like that. That just doesn't happen. Well, I say it doesn't happen at Shawbrook, and I feel that's probably true of most sort of specialist challenger lenders. That's just not the approach. I think that's probably the thing that I think most developers think would happen, and it just doesn't. We just go, let's sit down and we'll come out and see you. Let's have a chat. Or it really isn't that sort of intense and dramatic when, because like I say, we're not in the market because we don't understand it. We fully understand development finance. All my team are fully experienced in development finance, either with us or in their previous roles that they've been in. So we all know there'll be problems, and so we don't panic when there's a problem. We're just happy to have a chat about it and let's see what we can do. So I think there's this kind of misconception that maybe banks or a lender will panic if you tell them there's a problem and all hell will break loose. It really doesn't. We expect it. So we're very surprised whenever someone has done a scheme on time and on budget. It's like, wow, that's amazing that you've done well there. So yeah, I would say that's probably the biggest misconception, I think.
Absolutely. Well, that's a perfect note to end on. And thank you so much, Terry. It's been an absolute honor to have you back.
Thanks for having me again, Chris. Appreciate it.
No, absolutely. And yeah, we'll be having Keir on in 2 weeks' time, where we'll be getting into some more of the technical detail around lending and development. So please do join us for that. And if you can't wait for 2 weeks, next week we've got James Rogers joining us, the founder of Property and Poppadoms, who will be sharing how he built a property network, the biggest property network in the UK, just from a curry house, which will be a really, really interesting story. Please do share you guys in the UK Homes Network app, and let us know how you're getting on with your developments, everything that you've been up to, share your businesses. And of course, if you do need to find out any more information on Shawbrook, you can do through the UK Homes Network app as well. I hope you all have a lovely evening, and I will catch you very, very soon.
Thanks, everyone. Thanks, Chris, again. Take care.
Cheers, Terry. Take care, guys. Bye bye.